There's not a lot of bureaucracy there, which just makes it amazing. I'm actually literally falling in love with Alabama.
Excited for this deal. It's got stupid crazy returns and stupid crazy projected tax savings. Hey y'all, thanks for joining. I'm Tim with WCGInvestments here with my partner Matthias. We have an update for you on the Alabama deal. We just finished due diligence, so the DD period is over and we got 45 days to close the deal. There were a couple small hiccups that we needed extensions on, but we got everything situated and are excited to close this deal. Matthias, tell us about those extensions, what you know.
Yeah, thanks, Tim. So mainly we discovered some infrastructure hiccups at one of the parks out of the 5. It's really just that one. The other 4 were pretty clean. And we discovered there was a septic tank issue with the largest tank that's out there. This is not a normal 1,000 gallon septic tank. This was a 30,000 gallon septic tank that 31 homes were actually feeding into. When we did an inspection with a local septic company that we sent out, they found there was a leak on the tank. There was leaking water. There was also a lot of water going into it. There was septic lids because it's a big tank, right? There's several lids, concrete lids that were broken, so there was actually rainwater get introduced, etc. So there's a lot of issues there, which made us a little bit nervous. So we requested to the seller to dig a little bit deeper there and see what's going on, actually fix it. Thankfully, we're happy to report that the seller actually came through. They did an amazing job repairing everything. We got everything really well documented with paid invoices, copies that we got, and also saw pictures of how everything has been cleared around the area and new lids are in place. Even personally spoke to the maintenance guy that is responsible for the maintenance for that park as well, and he gave me a very detailed rundown what they were working on site. And we got even pictures from the seller while he was there during the repairs, while the septic company was there making the repairs. So that took a while. That's why we had extensions in place as well. And in the meantime, we were actually in contact with the local public works to see and research if we can tie into the local sewer line from the public works, which runs right behind the property lines, and what the process would look like to tie into that and make it all city sewer. So also happy to report the process is really simple in the Oxford area in Alabama. So you're talking about the $800 impact fee per unit, and it will go through a normal approval process. There's some engineered drawings that we have to create, which is fine. And then we can connect to city sewer, which will make it even easier for us to bypass that large tank. In the beginning, we'll just leave it alone because it's been fixed. It's been there for decades. It's doing a really good job, especially after repairs. I think we're going to be fine for a while, but we have it in our back pocket that we can tie into city sewer if you want to bypass that large septic tank. So with that being said, they eliminated a lot of infrastructure and hiccups that we had there, just to clarify a couple things. And due diligence was over as of the beginning of this week. And now we just go into the final phase of getting this deal closed by getting the appraisals done, the lenders doing their thing. In the meantime, they do all other site inspections as well for surveys and stuff like that. But yeah, we're getting excited to get this closed in the next 5 to 6 weeks. So I'm stoked.
Nice. Thanks, Matthias. What I love about this even more is that, we connect to city sewer and then all of a sudden we have something that is far more valuable because it's no longer city water and septic. It's city water and city sewer, which we know is best thing you can get with a mobile home park. So it's a relatively easy way to add a ton of value to this portfolio.
That's right, exactly. It will compress the cap rate, immediately drive up the value. You won't see that in income on the NOI side, but the cap rate will compress because it's a much more attractive asset. So that will drive up a lot of value. That's really big.
For everyone who doesn't know, really what we're doing now is we're having conversations with capital partners, with people who are interested in getting in on this deal. So far, we've had a ton of great conversations with a lot of people interested. Let's see, what else are we doing? Like you said, the bank's working on what they're working on in the background. Simultaneously, we're getting phase 1 environmental studies, probably getting zoning reports, Alta surveys, all that fun kind of stuff. But yeah, 45 days. It's exciting to close this one and operate it and pull all those same levers that we've done time and time again. I was talking to an investor yesterday actually about this deal, and I'm like, it's very similar to the Spartanburg deal that we have, just on almost triple the scale. So looking at how great that deal's going, I'm ready to keep the home runs coming.
That's right. What I see here is easy. The expense ratio is half of what Spartanburg was. When we bought Spartanburg, the seller had a 77% expense ratio. We brought down to 38. We cut in half. But man, that was a lot of work. With this one, they already operate in the high 30s, low 40s, which helps because of scale, right? It's 3 times as big. So the expense ratio usually organically goes down a little bit because you have more economy of scale. So that helps a lot. In general, the seller right now does a pretty good job operating it. There's a couple of things we can enhance and streamline, which we intend to do. And we bring fresh capital in to increase occupancy, which in combination with increasing rents as well to market rents is where the value adds are coming from. So I think that it has a Spartanburg touch to it from a business plan, but I believe it will be actually a lot safer than Spartanburg. Spartanburg was a really heavy value add as well and a huge operations turnaround, and also getting rid of a lot of bad tenants and then selling a lot of homes rent to own as fast as possible. There was a lot of vacancy out of the gates and we made it. So that was a good test, if you will, operationally. And we succeeded there. So the Alabama deal will be on a much lighter side from a value add perspective. It will be a lot less chaos. So there will be some evictions that we need to file. We're going to set new standards. We're very strict on it. We don't want to kick anybody out of their homes, but if they don't pay, they don't stay. It's that simple. And with that bigger scale, I think that we have a lot of opportunity here to make a lot of money for our investors with this deal.
I agree. A question that I've heard a couple times, and I don't shy away from it because we're very open and honest about things. What do you think the downsides of this deal are? What do you think the potential bad things that could happen are?
The bad things is perhaps it's a smaller market. It's not a small market, but smaller. It's not a big city, but it has like 30,000 plus people in each of the locations that we at, like Oxford and Anniston. It could be that leasing doesn't go as fast as you would like, but we underwrite very conservatively. So a little side behind the scenes for us is the recent deal that we closed in December in Albany, Georgia. We underwrote we're going to bring 2 new homes in a year. We do the same thing here. But what we're actually doing is we are ordering 4 homes out of the gate and try to jump ahead on the business plan. Even if we fall behind a little bit there, let's say we land at like 3 homes we're going to sell, we still ahead on the business plan. But it's very realistic to get 4 homes sold in a very reasonable time period and get them also set up pretty quickly. Within a couple of months after closing. So we just got them all set up in the Albany, Georgia parks, and we closed right before Christmas. So you have that little 2 to 3 week dead period when nothing happens. The manufacturers don't work, because of Christmas, New Year's. So the homes didn't really get kicked off into January, and we got the homes set up in April now, and we sell them right now. So 4 to 5 months, you can basically jump into the business plan year 2 immediately after the first 6 months, and then you're going to start selling these homes. But because of that reason why we have a smaller market here, we're not going to go in and assume we're going to sell 6, 7, 8 homes in year 1. So we hedge that with conservative underwriting. The Anniston market has kind of stagnant population as well. So that's another reason why we are very conservative underwriting. Whereas Jacksonville is exploding a population and Oxford as well. So we have to be very strategic where we putting our eggs in which basket in all the 5 parks. They're all the same county, but each of the cities behave a little differently. Like the Jacksonville, Alabama one is a very college town, university, and it's actually mostly occupied. I think it's like in the high 90% occupancy. It's almost completely full because in the prime location next to Class A multifamily. Whereas like the other parks are a little more outside of Anniston, for example, need a little more help with occupancy increase and stuff like that. And whereas like other parks like Oxford Circle have a phenomenal location, but they are not, up to a standard where they would deserve new homes right away. So you have to put some capital into place for like making a nicer place to live, do some upgrades. We even talked about painting tenant-owned homes and coming in and paint them the outside just to make sure they all have a uniform look and stuff like that. This will go a long way. So I mentioned the risk. We're hedging them as much as we can. We're very aware how smaller markets operate. We've been actually investing in a lot smaller markets than this, and we know how slow things can be in a small market. This is a medium-sized market. And also secondly, like on the public utilities, we talked about this in the beginning of this webinar, right? We know exactly what we're looking at with private utilities. And we already have a plan B getting into like city sewer connections because we got the plans from the city saying that's where the city sewer lines run. They literally run 2 lines parallel around our parks. So tying into them is very, very cost effective and very cheap. And the city of Anniston and Oxford does make it very simple to tie into their city sewer lines, thankfully. There's not a lot of bureaucracy there, which just makes it amazing. I'm actually literally falling in love with Alabama and how they do things, seeing how easy it is to get stuff done. So it won't be our last acquisition in Alabama, very likely. So yeah, that's basically it on the risk side. Is there anything else that you see, Tim, that I didn't mention?
When you were talking, I was thinking of another conversation I was having with someone and about this deal. And they're like, well, there's all these vacant pads. So people just bring in their homes. And I was like, yes, right? So what I love about mobile home parks is there's just different things you can do, so the game is increase occupancy to increase revenue, right? Increase revenue, decrease expenses, easy. what I like about mobile home parks is that we have different levers to pull. So it's like, yeah, sure, if someone wants to bring their home in to a vacant pad, we'll do that every day of the week. But the reality is, I mean, we've done this for enough times that it's not realistic to expect someone to do that. It costs a lot of money to move a home and get it set up. And so it's like, yeah, that's the number one. That'd be the best. But the second thing is, if there's vacant lots, we buy them. And then from there, we try to sell them outright to tenants. If that doesn't work, we can rent to own, or at least with an option to purchase them to tenants. If that doesn't work, we can rent them to tenants. So there's all these different strategies we can do in, order of best to not as good, not as optimal. But there's all these ways we can do it to increase that occupancy. We're not really the type to just sit around and hope someone's going to bring in a home. We get stuff done.
That's true. So it happened a couple times. We got homes in from other people moving their homes in, but it's just bonus. We don't underwrite for that. It's just like if somebody says, hey, I want to, they call our main line on the sign, right? That's out in the park, and they say, hey, I bought a home. I need to place it somewhere. Can I bring it into your park? That's just bonus money. You don't have to spend that money bringing a new home in. Of course, you want to make sure it's a decent home they're bringing in, and maybe give them like a month or two free lot rent because it's free infill, so they can absorb some of the transportation costs and stuff and permitting that they have to probably get. But yeah, that's best case scenario as a park owner if someone brings in their own home. But yeah, I think how many times did that happen in the last year or two? I've just seen like once or twice maybe in our parks. It happens, but it's super rare that somebody does that.
Yeah, and again, like it's why I like this. There's multiple ways that we can increase the value of what we're operating. So it's really good. Hey, I'm excited for this deal. It fits in with everything else we're doing, everything we've done multiple times before. And yeah, the more we do it, the better we get. So I'm excited. Anything else you want to add?
Yeah, I just want to do an opinionated statement. That's why I like mobile home parks so much, because there's so many ways to make money. You cannot just say like in apartments, a tenant brings their own bedroom. Doesn't work that way. But in mobile home parks, people can bring their own home and do infill for you. So it's so beautiful how many ways you can do all strategies at the same time, right? I mean, you can have someone bring in their homes, you're bringing new homes in, and the occupancy goes up. That's why I love this so much. And the tenants, it costs a lot of money to transport these homes. This, contrary to their name, they're not very mobile. So if somebody moves into your park,
I love that. I think I'm going to call around to some apartments and ask them if I can bring my own bedroom.
yeah, I started something. It's a new trend. Yeah, it's a new movement. Yeah, bring your own kitchen.
I agree with you. It gets a lot easier with scale because we're able to afford the right people in the right seats. And we're able, like, there's everyone that talks about economies of scale, and we're living that. We see how much more efficient and effective things are for us. So yeah, man, this is exciting. We're excited for this deal. It's got stupid crazy returns and stupid crazy projected tax savings. It's in our wheelhouse. It's what we do. Alabama seems like it's going to be really good to us.
Sweet home Alabama.
That's it. Thanks everyone for watching. If you have any questions, by all means, hit us up. We'll answer any questions you might have about this investment. Thanks again.
Thanks, everyone.
Mobile home parks. It's the most recession-resistant, supply-constrained, cash-flowing asset in American real estate.